Hello guys, welcome to a Trading Parrot. Bitcoin just put a new all-time high and we're gonna do what corresponds to be done in a moment like this, which is to challenge both sides, the bullish and the bearish side. We're gonna put every single data point from my top 10 list of things that are not looking great, and we're gonna pair it on the other side with everything that says yes, we should be going now into 120 and 130. I'm gonna share my actual bias and the positions I have in the exchange, the reason behind. We'll look into general markets and of course the order book. We're gonna do a full analysis in depth to understand every single millimetric move of those whales that are already doing their nasty shit. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. It will be amazing if we can get into 1,000 likes thanks to the new all-time high. That should help, I hope so. And as you can see, Bitcoin just put a new all-time high and interest over time on Bitcoin continues to drop. It is the altcoins that are taking at the moment a little bit of the spotlight. In yesterday's video, we covered the Bitcoin dominance. We made a stop with a magnifier glass on USD dominance versus total predominance. We look at the altcoin season index and why we have a very good chance from the point of view of the technicals for the altcoins to outperform. Every single video has timestamps, so you can go to the previous video and watch that part specifically, or this video that you're watching is also in the description with every single timestamp. And as you will expect, after an all-time high, we are getting plenty of bullish news. ETF inflows hit 15 billion as traders chase upside in spot funds. Bitcoin blasts to new all-time high near 112. I guess that is the main news. And Reserve One to raise over 1 billion on Nasdaq for a Bitcoin heavy treasury play. If you are interested in altcoins, make sure that you are part of my elite membership on my Patreon. Today we're gonna have another private 1 full hour TA with a selection of coins precisely from the ones that my members are requesting, which are these ones. This is at 3 p.m. UK time and there's still time to join and to select the coins that you want. You get 5 hearts to spread across these coins. You can add the ones that you want, vote for someone else's, and then join live, ask questions during the full session, and then the live stream becomes a shorter video which goes live tomorrow, so you can always watch it for free. So looking at the news and trying to see how retail is explaining the new all-time high, and there seems to be a lot of articles attributing the new high to Nvidia rally. After all, Nvidia yesterday put 4 trillion market cap for the first time, leaving behind Apple and some other magnificent 7. We'll look into this in just a moment when we get into general markets. But as you can see, general markets have the final say when it comes to dragging Bitcoin in certain direction. So data point number 1 that I do not like, which is the Federal Reserve balance sheet selling off into this area of a potential channel to the downside. It is just a yellow warning. It's not red because we are still not officially in a channel. It's just speculation that we could stay inside this area in here and continue to the downside. Global M2 is just taking a tiny dip as well, so not even a yellow warning from that end either, but something to monitor. What I do care a lot is about the aggregated open interest across all the exchanges, because if you look at this area of the breakout from the period of ranging in 2024, we have the breakout, we reach a peak of 35 billion, and then we broke down from the support of the impulsive move. After that, what do? Well, we reach 73k and we go sideways and eventually slightly bearish when we hit 49k. Sorry, I mean 74k in this area in here. And the reason that matters is because we had a breakout from here on the price and the open interest from those lows of 74k, and we monitor the move as we reach $37 billion. So we have something equivalent happening in here, which is the breakdown below the impulsive move. So where we are now in terms of the aggregated open interest is we are approaching the scene of the crime by getting closer again to 37, but this time coming from below after having broken down. And this resembles what we did in this area in here. So if you forgot what happened at that point, we reach an all-time high in this area of around 106, but then we reach a higher high on the price. But the aggregated open interest couldn't manage to get a new high. And that set the precedent with that bearish divergence against the aggregated open interest that the price needed to take a dip. In my opinion, that produced or supported the thesis of a double top in this area. At that point, we have a double bottom, we have a neckline, we were supposed to break out from here. And let me show you something else. I'm gonna change the settings, and instead of using the close, I'm gonna use the high so you can see it clearly. We had a double bottom in here, we have a neckline, and the price put a new all-time high at almost 110 after having put one at 108. So what is the pattern? Price putting higher highs and aggregating open interest breaking down and not managing to take the highs of 35 billion. Okay, let's go into where we are now. Focusing on this area, we have a double bottom, we have a neckline, and we also have a new high in the price that is 112 relative to this area in here, which is 111.9 or 8, I don't remember exactly, but is a few $100s below the new all-time high. And we also have the aggregated open interest now at 36, about to reach the scene of the crime below the previous one. So we do have that bearish divergence, and it is just a word of warning. It's not necessarily a data point actionable to say, okay, then it's failed, let's go home or anything like that. But you know, it's good to put on the table this data point in case it was to play out in a similar fashion. How do we know it's playing out? Well, we put the all-time high and we start breaking back below the neckline, starting to take the mid-range below 105k. Well, at that point we know at least that the double bottom is not ready yet to play out. And remember that double bottom, we already have it in here and we have it with a target of 121. So basically, after hitting this all-time high, to not repeat the performance on 1 and 2, we need to defend the point 2 and continue the trajectory into 120 and not go back into 105 and below. Easy. Next data point. August tends to be quite a bearish month. Not every August, but watch out because we are approaching August after 4 months in the green. Can we have a 5th month? Yeah, sure, we can. Like for example, in 2017, the perfect cycle, which is the one I refer as like that, we have 5 months and actually August was the best out of the 5 months. But if you look into the median and the average, it tends to be slightly lean into the red, and if it's not August, it is September, the one that tends to have the most red. In September is -3%, the average is -4, the median. But August has the worst median. So August or September seems to be the test, and then October is what we refer as October because it tends to go up all the time. So data point 2 on the bearish side is August could print a red month, and if it does, typically that sets the scene into a positive October and end of the year. That supports the thesis of we are not ready yet, we might just take a little bit higher, let's say into 115, and then fail into August in preparation for a stronger October, November. Now, if in August we continue into all-time highs and we go into 125k, I will expect things to flip and to have an October or November potentially not as good. I feel like it's like one or the other, not both together. When it comes to CME gaps, we have just 4, 1, 2, 3, and 4 in here at around 97, 91, 54, and 21. Those are the ones that we have left. If you remember, just a few weeks ago, we were counting 7 CME gaps. So we have slashed that to half, a lot healthier. And I'm hoping that we do not have to do a failure now like we did in the previous double top, and we have to move 15% back down into 97 or 91 to take that liquidity. That will slow down things, but it will still keep on the table that possibility that in September, October, November, then we have a big rally incoming. To be honest, if you ask me, I prefer a failure into August at full disappointment, and then an October that is really, really blasting into even 140, 150. I kind of feel like if we are rushing things too much and we carry on with 5, 6 months in the green, that's just gonna hit 120, 125, and then we could have a larger collapse. I have updated the Bitcoin status, as you can see in here. On the 4 hour, we are close to resistance. On the daily, we ended up doing the scenario that I was suspecting yesterday. I'm gonna talk a little bit about that. Let's go with the 4-hour first. As you can see, this line, this yellow line, is still in play from the lows, hitting every single point in the middle, all the way in here, almost perfect matches, and even the new all-time high is around that area. If we focus on the RSI, yesterday we left the line at 72. We broke out very prematurely from the squeeze that we can see in here, and we went straight into 72.97. Right after that, it's been so far a small rejection. Just watch out with rejections at the top green line in here. The last one that we saw a rejection, we were trading at 110 and we ended up retracing into 97k. If we were to break beyond 72, we still have on the 4-hour the upside into RSI 83, which is currently trading at 117. By doing so, we definitely take care of all the short-term liquidity in the 4-hour time frame. There is still some leftover at 112 into 113. There is a decline after that, but we could say that up until 117, it's still substantial enough to potentially blast it all. For that, of course, we need to break this 72 and not see a rejection in here. We need to update the support, which is now probably at around 53.68. Let's look at those levels in the price action on the 4-hour. You can see that if we go into that support, that coincides with the recent highs that we were not able to close beyond that. The highest close around here is 109.8, so pretty much that will take this fair value gap in there if we go into support. The area where things start getting gray is if we go into 108.5 again. It's very funny that once we found this line, I started saying watch out for a rally that continues hitting this trend line constantly. So if you get a rejection in here, you could continue. I'm tempted even to extend the line to see if we are gonna rally all the way below that line. On the CPR, we also have new developments as we approach the same line in here. We are hitting 111 and we have the first resistance, which was 112.357, that we were just millimeters from testing it and confirming bullish things for the month upcoming. Remember that the model, if you touch this line, it is bullish for the next month, but we haven't yet touched it. Just a few $100 left. Ideally, we should actually effectively get there to turn the model into bullish again. And yes, on the daily, I was saying that despite the fact that the momentum was coming down in here and that there was the risk of putting a bearish cross in this area on the MACD, and despite the fact that we broke down on the daily, on the 4-hour, on the 15 minutes, I was saying that there is a good chance in here that we reclaim the line and we continue to the upside. And that is because we are so close to that liquidity, and there was so much support as well on the bid in the order book, which was telling me, really, they really want to throw the towel in here, or this is just a trap for people shorting at 108. It seems to be the latter one, because we are now back above support and broken out from the yellow line as well. I was also mentioning yesterday that despite the fact that we broke down on the daily, we are still defending the breakout of the top of the range. This seems to be the most promising breakout that we have done out of the 3 or 4 that we can see in here. The first one being this one, came back down, this one failed, this one lasted just a few minutes, and so far this one seems the healthiest one because we have a bullish structure with higher highs and higher lows. We retested countless times the 107, and now we have a green candle pointing up. We put the all-time high, we are right below the all-time high, so now we need to continue in this direction. Of course, a close below 108 puts everything in a difficult situation because it resembles every time that we have failed, and if we continue to fail so many times, we turn this into a double top, and very easily we go into the point of control. And I'm laughing because I have said that so many times and it hasn't played out, but that is the model. I cannot change the model. I think the model hasn't performed well in this area, but it's still a good model in my opinion. And the weekly is looking fantastic. If we were able to close like this on Sunday, there is a very, very good chance for continuation to the upside. You can see that we have reverted all the red battle that there was in here after a big green engulfing candle reclaiming support on the weekly, then a breakout confirmed last Sunday, and now a new green candle coming from the area of new support saying we are ready for price exploration. Now the bull cross on the stochastic RSI makes a lot of sense. And what's next? Well, we need to hit 71.85. Bitcoin has a responsibility now to go to 121 and not produce a similar pattern like this, right? So that double top, we don't want to form another double top in here. If we do, then we have a good chance that we have an August a little bit like an earthquake. And yesterday we put a leverage squeeze to sell signal. I'm gonna show you the past performance so you keep it in mind. So focus on every single signal in the yellow starting from the beginning of the bull market. This one clearly failed. This one gave a move down of 5 to 6%. This slowdown, the aggregation of all the signals made a move down of 20%. This aggregation another 20%. This is a signal right before shooting up but with a decent move down of 8%. There are plenty of signals in the middle of banana zone that have some drawdown. This one eventually moves down 16%. This goes sideways. This one moves down 21%. This one moves down 20%. You get the point. There are plenty of double-digit performance. These three move down 30%. Even before this rally, we get 7% down. And I will say that more likely than not, you get these moves down. But in the recent past performance, during the rally from 74 to 111, this one's called for sideways, this called for sideways, and this one is, we could consider it either a signal that gives maybe a 5 to 6% before shooting back up into 120, or it's gonna be a failed signal, or it's gonna give a decent 20%. Impossible to tell. You can see in here that it's reaching 86. There is tons of longs now in the market. That's what it's saying. Another data point basically for a potential bearish move. And the hash rate continues to decline. In here now it's at 800 million. So I doubt we're gonna get the buy signal at any point now. So I wanted to touch base on this. Unfortunately, the video is gonna get a little bit long, but this is important information. You can see the stochastic RSI on the monthly time frame pointing up. Remember that the theory or the past performance, we could say, says that once in a bull market you've been in the top of the range and eventually you go into the middle of the range, any bear cross that you put right after that is the end of previous cycles. For example, this bear cross in here, this bear cross happens way lower. Then last cycle we had the bear cross around the bottom of the range at 25, and now we were talking about this bear cross that happened at this level. It's kind of a gray area, right? Because it's not a bear cross at the top, it's not in the middle of the range, but we got in here, and now we went as low as 16. So really in the gray area, this is really based on past performance saying I had enough, we need to go into a bear market, please guys, can we finish this? That is what the stochastic RSI on the monthly says, but it's pointing up. It seems to want a little bit more parting by pointing up. So I bring in the stochastic RSI forecast tool and I'm gonna pick some prices and see what end price of the month of July could cause that this move up with the mouth open, which looks so far very promising, turns into something looking more like a bear cross and saying, okay, I'm done, bear market. And let's say we close at 125k. Well, that wouldn't change anything. That will mean that it will remain pointing up, very bullish, just like we are already. But if we close at 115, then the same, that is still positive. What if we close at 105, still positive, no damage. 100k, well, we don't put a bear cross, but we put in risk that the next month we could put a bear cross. And up from what price and lower do we secure a bear cross in July? Well, for that, Bitcoin needs to close at a price of 97k or less, because at that point the bear cross is pretty much guaranteed. There is just a gap of 3 points there, so I will find really difficult that the month after can do something significant to reverse the bear cross. And of course, if we close at around 90 in July, then it's settled. There's no way to undo that because it's already a bear cross. So I will say let's continue above 100k and everybody's happy and we continue going up. Another data point to keep in mind. So if you are in a long position already and you look at this data, this is something to keep it in the back of your head, hopefully not to prevent your sleep, but you know, to keep in mind. So Boris is pointing out that on every breakout breakout in this bull market, we have had a spike in spot volume in the delta of the price versus perpetuals. But so far, even though we put an all-time high, we are not yet seeing any increase in spot. Indeed, we see the hash rate still lower, and we see the fees as well still low. And that is a consequence, I guess, of excessive derivatives, spot ETFs, and weird layers that are not showing in here. For example, this breakout had a huge spike of the spot perpetual price delta. You can see it in here supporting the move up. Then this move up as well, a huge spike. This move up, even though it was a failure, it still had a spike. And this recent one into the all-time high of 106, yeah, again. But after that, let's focus on all of this area. It's just a flat thing. We went to 112, and spot versus perpetuals doesn't do anything. The delta is still negative. This suggests that while spot demand remains strong, perpetual prices, specifically on Binance, are still lagging. In other words, the rally seems to be driven primarily by spot buyers, with leverage long participants not yet fully engaged. Indeed, the spot ETFs, they're all in positive, and the CBD or purple whales is still lagging behind. We usually see them taking a primarily role on the breakouts. They usually know about it and they are responsible for it. In this case, it's been mostly the brown whales, the large positions of over 1 million to 10 million, that even though they are larger positions, if you aggregate the whole cohort, they are not a bigger volume than what the purple whales represent in total. And that's why the purple ones are the ones that bend the price in the direction they want. And so far, there's been just some involvement, but at this point, I will be expecting them to be at the top, pointing up with the price to turn into a data point of strong conviction into new all-time highs. So far, it looks like they could easily rack pull because they are not very involved. The data point of the liquidity pools is served on the table, is ready to be consumed, right? So we have 113 and even up to 115 or 17 right there on the table. Sometimes market maker leaves some on the table. I tend to think that they do that intentionally. They take the vast majority and then they leave something that looked like an obvious one, but then they don't take it. It rarely happens, but it can happen. And then on the longer term liquidity in here, we have a good argument to go even up until 140. And remember that to go higher, we don't need necessarily to have a huge amount of liquidity. Once you engage the short squeeze, things just go mental. For example, in here, we took all the red, 1, 2, and there was a third one that was kind of in, are we really gonna get there? And we did, right? We got into the third level and we carry on for a little bit longer when we started rolling over in momentums and in the area of bearish divergences, which is all this area in here. So if we were to repeat that, we have a 1, 2, and 3 and a little bit of room to get into 150 for an area of divergence. So the recipe is on the table and they could just light the fire by entering in the first group, and then we will have to see if we can jump into 125 to carry on in a similar fashion as we did in the end of 2024. That was in October, by the way. Now, let's continue with data points, right? So we are not here just to consume opium and every single thing that gives us the confirmation bias, right? That will turn us automatically part of the chimpanzee team. You don't want to be part of that. You want to have both things on the table and then decide like a proper trader. I was going to be saying a proper man, but there's plenty of girls here that trade better than you. So now that 111, this is a good data point, but it's very typical from a pump, right? You put an all-time high and then that liquidity of the last 30 days is gone and it looks like the only way is down to go into 107. Sure, for a failure, if we do a liquidity hunt scenario, as I show you with 1 and 2 in here, just a slightly higher high and then a failure of the breakout, which, is still on the table. We are above the neckline, but if we lose the neckline and we hit 108 and lower into 105, then once again we put a double top, equal low, equal highs. And if that's the case, 107 is the motivation to do so. 103 puts the last nail in the coffin. And we finally had some decent liquidation. I was saying this is too long to not have liquidations, although I wouldn't say this is the numbers that I'm expecting. I'm expecting way bigger than this. And if we carry on with the breakout to the upside, we're gonna liquidate tons of shorts. we could get into 125k and get a massacre of shorts liquidated, probably the biggest amount of shorts liquidated in all the cycle. But also, if from where we are, we reverse all the way back down, let's say into 95k, you're gonna see in here a 1 billion or more in terms of liquidation of longs. Whichever is the direction, I think the volatility is in play. We're just getting started with that volatility in either direction. Let's look at FAR charts. In terms of the placement of the orders, you can see that we have some decent resistance, 39 million at 115, and 120 now has 55 million. Below there is not much going on, and we just broke the 110 resistance that before was slightly, the same area. It was 50 million and then it turned into 56 and we still broke it. We can also see that on trading light, but in this case is at 113 with 600. Support is at 106, by the way, on the low end in here. Let's look at the same things on Market Monkey Terminal. We have that in this case at 112.5, not 113. Something is wrong with trading light that is not showing the detail of the number. It's rounding everything to thousands. It's just a disaster, that platform, since a while. 106 is confirmed on Market Monkey Terminal. The CBD is pushing higher in here, showing aggressive buying. And we got the order book on the right hand side. First on Binance, well, confirming that 112,600 is the resistance. On Bybit, it doesn't seem to work very well. On Coinbase, we can see 114, and on OKX is very, very narrow towards the price. So let's go into Bookmap, and here we have an aggregation of Binance, Bybit, OKX, and BitGet, and let's see where is that resistance. Yes, 112.6, and below the price at 106 there is support and around it, right? So 500 up, 500 down, that support is roughly around there, and the 108 has some support as well. The CBD shows in the positive, so that is confirmed as well, at least the average. If we zoom out, we can see a little bit of additional resistance at the moment, but I'm gonna go into High Block Capital to do a magnifier glass of bid versus ask ratio, order book depth, and all of that. Remember that there's just 24 hours left to grab yourself 50% discount on Bookmap. The QR code is appearing on the screen. There's 1 day and 13 hours to grab yourself this discount. You can also find the link in the description. So there is a little bit of a shift now on High Block Capital. The global longs on Binance have declined. In here we can see them now at 30, very similar to the levels of 30 that we have at this local top. So I'm wondering if this is gonna turn into a local top and start declining. If we do so, we need to pay attention. Where do we find support? If we are gonna find support at 108, that is acceptable, but if we start going slightly lower, we start losing the range on the daily once again. Remember, this is 108 more or less the top of the range as of now. So if we don't want to repeat that pattern and start spoiling the double bottom in here, let's carry on higher and let's not do such a deep retest. So another data point, longs pulling out decently here could put a local top. The funding rates are in the positive now, so there is less of a fuel for short squeeze right here. We need something like this in the red to then liquidate those shorts and use it as an energy to get us higher. It's not the only energy we have available, but it is a good one to have to push price higher in the bull market. As you can see, areas of negative funding rates push the price higher. That's something that we currently don't have. It can change anytime, but not this minute. Second, we are approaching this resistance that we already covered in previous charts. The 5% is kind of reducing the support at the moment, not significantly, but for the first time in all the move up. Another data point, not categoric one, not final, but something to put along with other things. And support at 10% is at 70 percentile, which is good. Same at 5%, 72 percentile. Support is a little bit thinner at 2% with just 44 percentile. And another data point that is slightly bearish is the amount of cumulative delta liquidations right next to the price. Calculations are still off. In High Block Capital is showing 10 billion. We usually get 400k, 600k. So what is that number? Makes no sense. So another alpha I want to share. This is more to identify local tops. Is not a final signal either. It can play out, it might not play out. On sideways, it plays out very well. In Banana Zone, it doesn't. So if we enter Banana Amazon, ignore this as a signal, but if you think that there is weakness from other things, this could overlap and support that thesis. What is this? This is the anchor CBD, and I have it set up with orders up to 100k and above 100k. So this box in here is above 100k. So let's consider these whales, and this one in here more towards retail because this one is below 10k. And we have an overlap of red. That means that the whales were heavily involved in this move up, but now they kind of slow down aggressively, and retail was short in this, and then they exit aggressively, potentially meaning that they got already liquidated. Well, there is 400 million in liquidations, and the whales were involved, and now they have reduced. So that signal sometimes is a local top. In here it was at 2%, in here it was another 2%. It can be more than that. In here it was at 11%. So, you know, it's something that indicates a slowdown, but in the context of banana zone, it doesn't need to be. On fair value gaps, another data point for a potential move back down, even into 109, is this fair value gap overlapping a 4-hour and a daily fair value gap. This is the one that we could consider a mild retracement, a retest, or whatever. We can accept that having this bullish pattern that you see in the screen coming back down up to here and then going back up doesn't look like a failure. It is if we start taking lows of 106, yeah, gray area. If we start taking the ones of 102, well, it no longer looks like a bullish pattern. It looks like we're just going sideways. And before we go into general markets and we have a look at Nvidia, S&P, gold, and the VIX that is doing something pretty interesting, consider opening an account on Bluffing if you want to be able to access trading from anywhere in the world, trade altcoins, have access to leverage, and get your account up and running in just seconds. Non-KYC needed for this account in particular, and you get bonuses pretty much for any size of deposit and trading volume. If you want to go KYC, then consider Bybit, which is now becoming available as well in Europe. They got a license or something that makes them completely legit in most countries in Europe. Of course, there are exceptions. Both links are in the description, and in this case, Bybit is offering 30,000 in bonuses. So here is how we closed yesterday. You can see almost a 2% on Nvidia, Apple as well doing great, Microsoft and Google. DXY is still holding the support at 28 on the momentum and holding the line right in here. I've been calling for getting into 96. After all, that is a long time support, but there is a support longer time than this that I cannot display because this symbol doesn't go that back in time. But if we were to hold that line in there, we could see a small rally in DXY. That of course strengthens the dollar, and it could slow down risk on assets for a little bit. If we break down from 96, that will be supposedly magnificent for risk on assets. Nasdaq yesterday continued climbing back up, but things are starting to slow down in this particular leg, so I wonder if we're gonna get still that pullback. Pre-market prices look 1 point lower on the S&P and a little bit higher on the Nasdaq. The all-time high on Nvidia now looks very healthy. There is not a single pullback so far, and it's just literally momentum pushing up and up and up. I'm pretty sure that people are going in on this big, not letting it take any breather so far. MicroStrategy at these levels is showing something very interesting. This is the setup for the inverse head and shoulders that now is hitting that neckline with the potential target of 600. The rally on Apple is a little bit humble in here. We at least managed to reclaim support and have done so far 27%. Last Sunday we reclaimed the 21 weekly, now we are retesting it, but we could say that is pretty much ranging in this area. Let's see if we can take the all-time high before 2025. I guess Nvidia, taking that 4 trillion market cap, is now taking the big spotlight, and with Apple having less exposure to AI, many people might be shifting away from it. Anyone that holds the crown of I am the AI king kind of takes all the market cap. An example of that is yesterday when Anthropic, I think it was OpenAI, saying that they're gonna release a browser with agentic capabilities, and immediately the Google stock tanked a little bit, just because that means that OpenAI could own as well everything to do with advertising, and that's a big threat for Google. So let's see if Google is gonna bring that agentic browser. After all, they are owning at the moment Chrome. As far as I know, they still do. So if you're still here, you deserve a wrap up at the end of the video, and also to get to know what I'm thinking to do with my short. I am not shorting at the moment, but I do have some limits to short. My intention is to short if we go beyond RSI 72. That is where I start paying attention for my short. If something continues to look dodgy to push beyond 112, 113, definitely I'm gonna be in a short. The intention is to enter with small volume and scale up if we end up taking all the short-term liquidity. I personally believe that we are not necessarily gonna be in July and August doing a 3-layer of liquidations with price exploration into 150. I tend to lean towards the thesis of doing that at the end of the year. I also think that if we do it too early, we jeopardize as well the rally, how high it can get. So my two options are, if we are bullish, of course, we can also have theses that are bearish, but the bullish thesis that I handle at the moment as possible are a rally too early that goes in August into September into 120 or 125, and then it completely fails to do any more than that, running out of steam into the end of the year. Or scenario 2, we fail what we are currently doing and we look for lows, let's say at 100s or 90s, and then we get a strong October, November that actually manage just to get beyond 130 into 150 and even possibly 160 by the end of the year. Either scenario allows me, while I'm holding my spot positions, to build some shorts to take advantage as well of the swings. That means as well that if we get those corrections I'm talking about, which are not guaranteed, and I'm not counting on any of these scenarios, I just have plans for either of them. Whichever plays out, I execute what I want for that particular plan. In that way, I don't need forecast. Everybody says, what is your forecast? I don't know. I don't have a forecast. I have specific things that I think are very high likely, and I have in mind how I will approach them. That's how I trade. People think that they join my Patreon and I'm gonna reveal them my damn crystal ball when I don't have a clue what's gonna happen. Anyways, thanks for watching. I'll see you in the next one. Bye bye.